Legends, hope you're well. Legends, it is the 23rd of December here down under. It is probably still Monday evening wherever you are, unless you're in the UK. It's probably early, or night, I should say, midnight. Thank you for joining. This is the Daily Buyer Show where we dig all charts as they relate to crypto. Disclaimer, I'm not a financial advisor. This is not financial advice. This is just my view of the markets for education and entertainment purposes only. So, legends, we are potentially setting up for a Santa Claus rally, but there's a massive caveat. We're coming into the end of the year where liquidity is thin, volume dies down, and given the macro context and the liquidity context, we can't get trapped in thinking that any moves into the end of the year, any rallies into the end of the year, maybe this week, next week, into New Year's, we cannot get trapped thinking that those are directional moves, okay? Because like I said, we are operating in an environment now where a lot of the big funds and big players are probably on leave, have probably wrapped up the desks, and this isn't the time where people are placing their big directional bets for Q1 just yet. So I believe over the next 1 to 2 weeks, we may have a potential Santa rally brewing, and I'm going to show you the specific signals and charts to track. Okay. However, I just want to make sure that we do not get trapped into thinking that any rallies that happen in the next 2 weeks are directional moves. Okay, they could be, but the chances or the probabilities that they are directional moves is low. Because we're operating on that thin liquidity, okay? So it's not until the first and second week of Jan that I anticipate that the bigger directional moves and the bigger strategic positioning will start occurring. So that's how we got to approach the next 2 weeks, legends. Now, let's just start on a quick few updates regarding the trajectory of liquidity. We haven't got our latest data. We got our major data coming in towards the end of this week, and that's where we'll get another liquidity update for our net liquidity indicator. Now, remember, this net liquidity indicator is tracking the flow and supply of liquidity into markets. It's the indicator I built that helps me understand exactly that. And when we have expanding liquidity, okay, we have typically it leads to Bitcoin blow off tops and price discoveries and supports a bull market, right? So we've had contracting liquidity. We're seeing since the start of November, the liquidity flatten, okay, and start to get an increase as it's aligned with some of the smaller initiatives like QT ending, okay, like the rate, the very slow rate cuts that are coming in. Okay, so we're going to get data towards the end of the week. But I just wanted to give a quick refresher on the liquidity picture because we're in a high rate environment. Even with the forecasted 2 cuts coming next year, that's still going to leave us in a high rate environment. And unless we get more meaningful balance sheet expansion from the Fed or an aggressive shift to cut rates more aggressively, or both, where they're meaningfully expanding the balance sheet and cutting rates aggressively, it's unlikely that any rallies are anything more than a counter trend rally, okay? So just keep that in mind, and we'll get more liquidity data towards the end of the week. If we're going round the grounds, okay, I want to just start off because we did have the traditional markets open, okay, Wall Street open first day of trade, and a few key charts I wanted to point out as they relate to any potential, Santa rally, okay, or seasonal end of year rally. What I'm basically seeing is that if we can have a DEXI that is rejecting the FOMC level here, Okay, if you just go back to my stream yesterday or any of my past streams to understand how I'm approaching the FOMC level, well, if we get a DXY that rejects the FOMC level and pushes down, I think this is our play zone that supports the counter trend rally. Okay, as we're approaching here, we need to be analyzing broader markets a bit more, because we can't just blindly assume that DXY down equals risk assets catch the bid. We just got to make sure there's no, economic concerns and recession concerns, because that could mean DXY down also, while risk assets continue down as well. So I think this is the play zone. So this is what I'm watching in the short term over this week. If we're getting this kind of move, then to me that more so aligns with the counter trend rally and the Santa rallies for crypto. If we see it start shooting back up, that's where we're in risk of the historical pattern and a tightening of liquidity or loss of risk appetite, I should say, because participants are moving back into the dollar. Okay, so that's what we've got to be aware of there. So hence we're watching this over the next few days to see if this is coming down. That would support counter trend rally. Now, if we flick over to the indices, we had our first day of trade, talking about the spot indices. Okay, and again, we're watching the FOMC level across all of our major indices, the DJI, the S&P, the NAS, and the RTY. And we had a bullish day, okay, across all. And what I'm mostly paying attention to is the RTY, because if we look at how tops in the market form, we've got or major turns, okay, when price is moving, when the markets are moving from bull market to bear market or bullish to bearish price action, by looking at Bitcoin, RTY, and NVIDIA, we get a good signal on the health of risk markets in general, which translate into the NDX and the SPX, because the NDX and the SPX always top last. That's why we need to be looking at Bitcoin, RTY, and NVIDIA, because they represent kind of like the spread of risk appetite. Okay, you've got NVIDIA that covers the AI trade, the Mag 7, the tech dominance trade, right? The faith in tech. You've got the RTY, which shows you the breadth of capital being deployed. That's the 2000 small caps. And then you got Bitcoin, which is the furthest out on the risk curve, right? In the way that it trades. And Bitcoin has been the fastest signal on global liquidity anticipation or stress or trajectory, right? So if liquidity is trending up, Bitcoin catches the biggest bid. If it's trending down, Bitcoin's the earliest signal to sell off. And we've seen that Bitcoin's already in its macro bearish trend. Okay, so it's fired the early signal. But what I'm specifically tracking right now for a counter trend rally is NVIDIA and RTY giving us both of those giving us some bullish action, because that to me would suggest that given we've got two of our three starting to lift up, at least even in the short term, that to me supports or adds probability that Bitcoin can push higher as well, okay? Now make no mistake, Bitcoin is macro bearish, okay? The weekly time frame is bearish. So a counter trend rally will be this move from here to wherever it goes below the all-time high, because that's where the weekly high is at the moment. So this is the counter trend rally, and for continuation, ultimately, it means that this will resolve to a lower high and then it moves back down, okay? We'll dig into that just a little bit more in a moment, but I just wanted to start here. We've got to look around the grounds at what the traditional markets are telling us, okay? And this is where, again, if we're just mapping those FOMC levels, if the RTY can keep pushing up this week, it supports or adds more likelihood that Bitcoin and crypto can sustain its current bounce and potentially give us something a bit more. Sorry, that's the Nikkei. Obviously, we'd like to also see the Nikkei ticking up because it is, you know, the Nikkei moves in conjunction, well, or you could say the risk markets often move in conjunction with the Nikkei, right? So if we come down to NVIDIA is flashing a few warning signs for me. Just, you know, when I see this daily structure tested, the bands have flipped on the daily, and we've got potentially a double bottom forming here, but I really want to see it trend like this on the daily. But like I've been saying over the previous streams, we're not really out of the woods when these structure lows get tested in this way. We're not really out of the woods for distribution until we're actually trending above the high, because in these bigger distributions, you'll see this range that happens when the structure low gets tested for some times, and you'll see these sweeps before it turns over into a bigger distribution. Okay, so we're not out of the woods, but again, if we're just thinking about the short-term rally thesis for crypto, where crypto is due for some type of relief, right, some type of bounce, that's where even a move, if the NDX is showing us some strength even back up to here whilst it's distributing, okay, if it is distributing, and the RTY is doing a similar thing where it's pushing up even if it's up here, in the short term, that would support crypto also catching that bounce, okay, for some lovely counter trend action. Now, if we head down to our favorite chart, what I specifically wanted to point out on stablecoin dominance, quick refresher, if you're new here, stablecoin dominance is one of the most important charts you need to be tracking in crypto, because this is showing you what crypto participants are doing, okay? Whether they're deploying stables into tokens, when you see stablecoins going down like this, okay, these moves down, that means they're moving stables into tokens, which means they're positioning, right? Whereas when you see stablecoins going up like this, that means they're selling crypto tokens to move into stablecoins. Okay, so hence we've been tracking this pattern where this was the last major bull market, and when you look at stablecoin dominance on the weekly bands, on the weekly chart, and you look at the weekly bands, when the weekly bands cross here and then weekly structures trending up, we break the range high, we're heading into a deep bear market. The bands have crossed already, weekly structure is already bullish, and we're at this range high here. If we keep trending up here, we're heading deeper into a bear market where Bitcoin and crypto will go much lower. Hence, this is a very important chart for you to always keep an eye on if you're participating in crypto. Just on the weekly bands, if you want these bands, I give them away for free. Just DM me on X, okay? Now, the specific signal I wanted to point out to you guys is when we look at clues for the counter trend rally, what you want to do is drop down onto the daily chart on this stablecoin dominance chart, right? So I'm using USDT plus USDC because they're the bigger, they capture the most of the action for stablecoins. Okay, when you come down to the daily chart and you're using the daily bands, this is what I'm looking for. I want to see it drop below the bands, okay? And then I want to see the bands cross red like this. That's my trigger to suggest that counter trend rally is in swing, okay? Because you can see here, from this portion, this was our counter trend rally until we started ranging down here at the major trend line and we turned over and you see the bands start turning over again. Okay, so this here was April to August this year. Now, if I just load up the Bitcoin chart, that's here, right? See it? You can see it night and day here. So hence, that's where I want to alert you legends to the daily chart and looking at the daily bands, because the daily bands is how we're going to get the fastest signal on the counter trend rally. Because if you were on stream yesterday, I mentioned that if you're waiting for dominance to fall down here, you've missed your opportunity to position into the rally, because you got to position during resistance, okay? And as early as possible when the signals flip. Because when we get into supports and the signals start flipping again to turn back over, this is the time to be exiting positions in crypto, because this is when participants are moving back into stablecoins, meaning they're selling their crypto, okay? So you've got to understand the dynamic of this chart, where you have to position into resistance and take profit into support, okay? Very important lesson there. Now, again, just DM me if you want these bands, but this is where we can get the early signal, because even if you look at all these rallies, okay, so this is Bitcoin from last year, September, into the Santa rally, okay? You see here, once we got the bands cross red here, okay, bearish, if you were longing Bitcoin from here, you caught the meat of that move, okay, right into when the bands turn green again. So I'm giving to you right now the most important signal that we can get to track this counter trend rally. So, because positioning too early means that you may get stopped, or we may be wrong, right? Because if this heads up, positioning too late means that you've potentially missed the meat of the move. So we got to find that sweet spot, and this chart with this system that I've just showed to you, or this little signal that I've showed to you, is a good way that we can get involved and get ahead of this potential rally. So that's the main confirmation signal I'm waiting for. I want to see price drop below the bands, because once price is below the bands will start rolling this way, okay? And then they'll cross, and then when they cross is when they'll turn bearish. And then we want to be, basically, once they're bearish, that's the confirmation signal. So that's where we can have more conviction that, at least in the short term, until we see the inverse signal again, we might be getting that counter trend rally. Like this to this would be a significant move in crypto. Okay, so that's the signal. Daily bands legends. And again, DM me on X if you want these bands, right? But they're not rocket science. There's a video on my YouTube in the building block series. No, sorry, not in the building block series, in my indicators, free indicators playlist, and it's got the bands in there, so you can see exactly how they work and how I use them and how good they are for crypto. Now let's finish up on Bitcoin. Right now, if you've been with me on the past streams and for the past days and the past couple of weeks, we've been in this range that we're talking about, and the main level we're tracking right now, short-term barometer, is our FOMC level. We've said that, again, like we're tracking it across other markets, getting above the FOMC level is the market telling us that they're accepting the Fed's gesture to take on risk, right? Because the Fed cut rates, meaning they're trying to incentivize some type of risk taking by making money cheaper. So if we're getting above this FOMC level, it means that market participants are accepting the Fed's gesture, at least in the short term, okay? Then we're going to come into our major flip zone, right? And this is where ultimately I'm looking at this zone and how deep into this zone we come for the major macro short, the continuation short back down to here. However, still room to play on the counter trend side from this range from here to here, okay? Even if you were to call that somewhat of a range mid from here to here. And during a move like this, altcoins are already outperforming on any major move to the upside. Now remember, they'll outperform on the downside too, right? Again, don't get trapped. This is we got to remember, this is, any move that happens right now up until these highs is counter trend, because the weekly structure is bearish. The weekly is our macro structure that guides the bull market. In bull markets and bear markets, the weekly structure doesn't flip unless the major macro trends shifting, i.e. we're moving from bull to bear or bear to bull. And if you've been with me on the streams, we've been tracking this weekly structure along with other signals that I'm not going to share right now. Just watch some of my previous streams. But the main signal is, look, the weekly structure shifted. This doesn't happen unless we're shifting from a bull market to a bear market. Okay, here, see the shift, right? So we got to remember that the continuation trade is actually on the macro trend is a short. Okay, this is the counter trend, right? So this to this is the counter trend, the potential Santa rally. And then this to this is the next continuation. This is the bigger macro continuation trade, potentially down at least to revisit the lows into continuation lows somewhere here, right? Okay, so that's just laying the context, right? So right now we're assessing the probability of this counter trend rally setting in. Okay, now let's just have a look on the daily. You know, we've been in chop city since the FOMC, right? Let's just look down on these lower time frames and look, this was the day of the FOMC and just look at this chop, right? Now, again, if you've been with me on streams, I've been saying don't get caught in the chop. Right? Don't get caught. Use this FOMC barometer level. And just to refresh you, the only long that I'm interested in right now, and my decision remains the same for Bitcoin, the only long I would entertain is from down here. Okay? Because what down here potentially sets up is, especially if we don't go up here before we come down here. So what I'm saying is, if we reject the FOMC level here, then come down to here, this builds for a higher probability long because we've built up liquidity all through here to fuel a move back up to at least here, right? So that's the only long that I'm interested in right now, is if we don't come up here beyond the FOMC level, let's call it. Okay, so we don't move up here taking all of this liquidity then coming back down, right? Because I'm not that, this becomes less appealing as a long. If we just move straight down from here, okay, or even, you know, dawdle our way down, and then I'm looking for daily and weekly sweeps into this level, and then I'll be looking for my entry signals on the reclaim to long from here to here. Okay, that's the only long setup I'm interested in as of right now. If that changes, as long as you're with me here daily on stream, I'm here daily at the Bitcoin close, you'll know if that changes. Now, the short setups that I'm potentially interested in at the moment, if we do come up here before taking out any of these lows, then I am interested in, because this is technically a daily range now, right? Then I am interested in the short, at least down into here and into these lows, okay? If we get above the FOMC level, okay, and we're sort of chopping about, that's where I'm kind of paused and I'm just going to be analyzing price at that time. I'm not committed or planning to take any positions if we're just kind of dawdling through this zone, okay? Because I want to assess what's going on, where the liquidity is building up on the chart, and you know, I'll look at other things like market sentiment and broader charts at that time, to ultimately to determine are the bulls taking some sort of control to drive us a bit higher, or is this just a massive buildup of liquidity and then we get, you know, sweep to build for this to be the continuation move lower. We'll assess that as we go, legends, day by day. Again, if you're here with me on streams, you'll know how I'm thinking and what I'm thinking. Because like I said, I'm here daily at the moment. Legends, that's it for today's stream. I hope you got something out of that. Please like, subscribe, follow me on X, TravB Crypto. That really supports me in the channel and gives me the energy to keep doing these videos. If you don't catch another stream before Christmas, or before the end of the year, I wish you happy holidays, Merry Christmas. And otherwise, I'll be back tomorrow it'll be Christmas Eve here, here in Australia. I'll be back to stream again tomorrow. Thank you, legends. Please like, subscribe, follow me on X, and have a good one.